Welcome to MONiQ. This is your personal trainer for building up your money IQ. Our whole goal here is to make financial topics that seem complicated, well, simple and easy to understand. Today, we're going to tackle the Pakistan Stock Exchange and build your ultimate beginner's guide.
Hey, let's be honest for a second. Have you ever looked at the stock market and just felt it's a little complicated, maybe even a bit intimidating? If so, you are definitely not alone. But stick with me, because I promise, by the end of this short explainer, it's all gonna click.
So here's the plan. We're going on a 5-part journey together. We'll start with the absolute basics, then learn the lingo, get a feel for the market's mood, see what it all means for you personally, and wrap it up with some golden rules for success. Think of it like we're building your very own investor's starter kit from the ground up.
All right, let's dive right in. To really get a handle on the entire market, we've got to start with the fundamental building blocks. What is this whole thing actually made of?
Okay, so the single most basic unit of the entire stock market is something called a share. And it's exactly what it sounds like. When you buy a share, you are literally buying a tiny, tiny piece of that company. You actually become a part owner.
And here is the absolute best way to picture this. Imagine a company is a giant pizza. Buying one share, that's like buying one single slice of that pizza. Now, you don't own the whole restaurant, of course, but you absolutely own that slice. Simple, right?
Now, you'll hear people use the words share and stock pretty much interchangeably, and that's usually okay. But there is a small technical difference. Stock really refers to your entire collection of shares. So if you own a few pizza slices from one company and maybe shares in a couple of other companies, all of those together make up your stock.
So where do you actually go to buy and sell all these shares? Well, that all happens at the Pakistan Stock Exchange, or PSX for short. The easiest way to think about it is like a huge central vegetable market, a sabzi mandi. It's the one official organized place where everyone comes together to trade, except instead of vegetables, they're trading shares in companies.
Excellent. So now we know what the pieces are. Let's learn the action words, the language that traders and investors are using every single day to make things happen.
You know, it really boils down to two very simple fundamental actions. You can either buy a share, which means you're purchasing it to own it, or you can sell a share that you already own to somebody else in exchange for money. That's the core of everything that happens.
But what's really happening behind the scenes is this constant negotiation. That's where the bid price and the ask price come in. The bid price is what a buyer is offering for a share. The ask price is what a seller is hoping to get for it. A trade only actually happens when those two prices meet. It's a continuous dance between what people are willing to pay and what people are willing to accept.
All right, we're making great progress. Now that we understand the individual actions, let's zoom out. How can we get a feel for the health and the direction of the entire market at once? What's the overall vibe?
One of the first clues is something called volume, and it's simply the total number of shares that were bought and sold in a single day. Think back to our market analogy. If a huge number of mangoes were sold today, you'd know it was a busy, high-activity day. It's the exact same idea in the stock market. High volume means lots of people are actively trading.
So how do you figure out a company's total price tag on the market? That's called market capitalization. And the math, as you can see, is actually pretty straightforward. You just take the price of a single share and you multiply it by the total number of shares that exist. That final number is what the entire company is valued at on the stock market.
Now, you will hear these two terms all the time, bull markets and bear markets. A bull market is when the overall mood is optimistic and prices are generally rising. Just think about how a bull thrusts its horns upwards. A bear market is the opposite. Pessimism is in the air and prices are generally falling, just like how a bear swipes its paw downwards. It's a really easy way to remember which is which.
Okay, this is all great theory, but how does it connect back to you and your money? Let's zoom in on the concepts that directly affect your personal investment journey.
You know, one of the best parts of being a shareholder is the potential to earn a dividend. When a company makes a profit, it might decide to share some of that profit with its owners, which is you. That payment you receive is called a dividend. It's kind of like owning a tree that gives you some fruit every year, just for being its owner.
This brings up a really crucial question. What kind of participant do you want to be in the market? A trader is someone who buys and sells pretty frequently, trying to make profits from those short-term swings in price. On the other hand, an investor is playing the long game. They buy shares and hold on to them for a long time because they believe in the company's future growth.
And finally, all the different shares you own from all those different companies are held together in what we call your portfolio.
It's just like your school bag holds all your different books for different subjects, your portfolio holds all your different investments in one place.
We've covered a ton of ground. Now for our final and maybe most important section, let's lock in 3 golden rules that will help guide you on your journey to investing wisely.
Okay, these are non-negotiable. Number 1, learn first, then invest. Knowledge is your best tool, period. Number 2, don't put all your eggs in one basket. You want to spread your investments across different companies to lower your risk. And number 3, the market runs on logic, not emotion. Try your very best to avoid making big decisions when you're feeling overly greedy or fearful.
And that really is our promise to you here at MONiQ. Our entire goal is to take what seems complex and make it simple, and to take what seems boring and make it interesting. We want to empower you with real financial knowledge that you can actually use.
So, if this explainer helped you out and cleared things up, help us out by hitting that like button. And to keep boosting your money IQ, make sure you subscribe for more financial wisdom that's coming your way.
You've just taken a massive first step, which is learning the fundamentals. So the only question left is, are you ready to continue this journey and take the next one? Thanks for watching.